Hello everyone, welcome to the first market review of this year. Today is the 6th of January 2020. We have a lot to look forward to, a lot of great trades, a lot of volatility. Hope that we can catch some nice moves together. Here's the total market cap. Absolutely nothing has changed from last week. All I want to show you is something different this time, the ADX indicator. If you haven't watched ADX tutorial, I suggest that you do so. I think it's a very useful tool, and it's something that's not so frequently used in the crypto market, so you will find a lot of value in it. So look at the link and watch the ADX tutorial. And all I'd like to say is, yes, this weekly support resistance flip. Also, we had the flip in the DMIs, and even though the DMI did not break the 25 level, what we had is this cross and hold, and this is basically a breakout play, and all you're looking for is for a breakout of a major level. And with the dominating DMI, this negative DMI meant that at this cross and hold you would be looking for a dump, and you would be waiting for either a breakout or catching some kind of a risk adjusted play on the upside. And what you can see on this side is that we have had a similar cross and hold. We've been holding this since the 18th of November, this ADX cross. So let's see how this manifests. It's pretty clear that there is demand here. You can see because of the wicks, like I mentioned last time, and it's pretty clear how to deal with that kind of a demand. If you want to be safe, just wait for the weekly resistance to turn into support. But this suggests that there is still a probability that we can break downwards. And according to the ADX weekly cross and hold play, we are looking for basically a breakout to the downside. And I would be pretty happy to get this 150 level I've been looking at, because the total market cap, it moves in whole numbers. So you can see the strong resistance. This was 200 billion. You can see the bottom, it was near 100 billion. That's where BTC bottomed out, and topped out 700 billion. So this total market cap really likes whole numbers, and it would be pretty interesting if we do end up getting this 150 billion. So just keep a lookout for this, guys, and do check out the ADX. Even when price is a bit sideways, sometimes these indicators can give you an edge. So have a look at it. Here's the altcoin market cap, and you can quite clearly see that 2 weeks ago we broke down. Last week we were testing the weekly support as resistance, and this week again we have failed to reclaim this weekly level. And essentially this again reflects the same thing. There does seem to be demand, but price is not climbing. So that means either we are heading towards a consolidation and another retest of these lower levels, or we need to possibly this week reclaim this weekly resistance, and more safely the 62 billion weekly resistance. So again, guys, this looks more bearish than the total market cap, because essentially till last week BTC was performing better than alts. So still on a higher time frame, there's nothing much to see. I know a lot of CTs starting to get bullish again, but just look at that. You need price to reflect sentiment, and currently it's not doing that. Here's alts against BTC, and this is something that is reasonably positive, because it's not broken any major support levels all the way since September, We basically moved up and retraced back. We broke this weekly level on a closing basis, but you can see we've reclaimed it. We held this weekly level as support, and right now we are starting to build somewhat of a consolidation pattern, but it can be something similar to this. If you look at it, it is a bit fractalish. uh, this and this, but if you look at the date, this is the 10th of December. It's literally the bottom of the previous BTC market, and this is the move that we made after that. So it is still possible, guys, that we have already seen the BTC bottom. It is possible that we are just consolidating, not breaking that resistance, and in the meanwhile alts can do something similar too. So on lower time frames, there have still been some very nice plays for alts against BTC and also alts against USD, because since the correlation has returned, if you watch the previous weekly report, the correlation for now has returned. So the moves up will always be stronger for alts, and the moves down will be again stronger for alts. So right now, I think the better play for crypto, if you do want to be playing these movements, is to be playing alts. Going to be looking at BTC in a couple of different ways, but basically first, the most important is the range play, the range that we've been using very well to play this. If you're following me on Twitter, we caught this move down. We also caught the bottom right here for a move up. I was expecting price to at least take out some kind of liquidity before showing direction. So that's why I have this orange level drawn out, because I was thinking of at least taking out these highs. Why I did not think of price possibly going higher? Yes, there is a lot of untapped liquidity here, but I think right now for the market, it's been quite a long time since we've been trending down. So the market has become conditioned to shorting bounces. It has finally happened, because every time there is some kind of a bounce, I see a lot of people who are looking to fade the rally. So I'm thinking if we do take out these highs up here, it would get quite easy, and the trade would get quite crowded for price to come back and break below this range. So at the most, I think something like this would be really nice. So for me, the play for BTC would be this orange line. I mean, I would want a stop run, a swing failure pattern, and that's when I would take this trade. I'd also be looking at the yearly open. Let me just switch time frames so I can mark out the yearly open. Second, first. Yeah. So yeah, this is the yearly open, and what I would want is to take a smaller position up here and on the swing failure, and once we do break this yearly open and confirm that, I would add to my position, and of course I would be taking some profits here, but I think since we've had 1, 2, 3, at least I would be looking to take out this low down here if price has to move down. So for now, that's my play for BTC. That's essentially what I'm looking at, is for at least this high to be taken out, and for us to get either a slow bleed or a move like this, which is slowly expanding to something which becomes a bit of an acceleration and takes out these levels. I think this 5800 level is quite important for BTC. So if we do get here, there's a lot of people waiting for price to get to the 5k levels, and that's the only reason I'm thinking we don't go solo. though it is possible. And if we do that, then I think the market will take a much longer time to consolidate. But since the halving is near and the mining break even is, I think, in this box right here between 6500 and 5900, this is where the mining break evens are. So maybe a bit of a scare for the miners to get to the bottom of this order block. I'll just show it to you on a higher time frame what it is. So this is the order block. This is a quarterly block, and if you do want to look at very quickly the quarterly chart, yeah, so this is the quarterly block, and it is quite interesting that the minor break even is within these prices where we've had a breakout and a retest. So same plan as last week, guys, essentially just looking for price maybe to test this for validity once more. If not, then we have our range to look at. And if you don't know, something else about a range is that if you do find support on top of a range, then the target becomes the size of the range itself. So essentially, if price does break up and we do break up above 7800, we could be targeting these highs. And I think if we do that, this is a decent reflection for reversal, because you would essentially want to target something up here, the liquidity up here, and then you would want to find support at the 7850 level. So this is the play for now, guys. Catch the liquidity here and hopefully add to a short below the yearly open, target the quarterly support lows, and multiple buy orders to close the trade between this. Maybe hold a bit in case we are heading down for a much deeper dive, but I find that of a lower probability. And if not, then the breakup from here, no point of fading this either, because we've had such a long consolidation that whichever way it goes, it's going to be a bit of a strong move. So if we do find support here, I'd be looking for upside. Pretty clean, otherwise this range is working very well on BTC. And even if we do keep ranging, do check out the video on ranges, guys, if you really haven't. It's been since November we've just been ranging, and if you understood that logic, you would essentially be able to be making some decent money in this range. Here's Dow Gold on the weekly. I just want to show you how clean this wedge is looking, and currently you can see that this long-term trend line from 2012, we broke down, retested it, faked back into it, and currently we are fully out of this trend line again. This is declining momentum, but this is a very clean looking falling wedge that we are in. And if this actually has to manifest into a wolf wave, then price would literally have to do something like this. And if we do that, you get a target of new highs on Dow Gold. So this is, I think, looking like a probability, since we've got news on fundamental news on the markets regarding the killing of the general in Iran, and let's see how price develops. But this is looking like a very clean falling wedge, and gold is looking decent for upside, and I think it is very possible that we start to build some kind of distribution in the stock markets. Here's the Nasdaq. It's getting ready to break out of this channel, but you can see that we've had one strong impulse and then a bit of a slowdown. We flushed out most of everyone in November, and then we had another strong impulse. But you can see how long this channel was and how much shorter this is. That means there is some kind of supply over here, and of course now we have fundamental news. So uh, it is, though not very extremely, but it is reflecting on price. And essentially from October we've had about almost a 20% move, without much of a correction. The largest correction was about 3 to 4%. So I think we are due a bit of a correction here in the indices. And if you look at it, it's like, what a monster run this is. All of 2019 has been absolutely spectacular. From last Christmas we are 51% up, without having really much of a correction. It was only April last year we did have this 10% correction, built out the structure for the next move. But there was basically a lot of fear here, guys. I mean, even now, I think most of the people missed this move. So I would like to see some kind of a correction now, though, because it is looking steep. There are early signs of it, with metals moving so much, other commodities getting interesting like oil. There are some signs that we are going to start to at least go into some kind of a distribution phase. I'm expecting equities to kind of get boring for the next month or two, or at least to get into some kind of distribution before flushing out. It's a very bold thought, but I would really like something like these lows to be taken out if we do get a bigger flush, which owes to some kind of fundamental news. These lows at least to be taken out, but for now that's all speculation. Technically we're just breaking out of a small 4-hour channel. Also we're losing momentum. The impulses are getting smaller. If you count, this is a big impulse consolidation, and if you compare this big impulse, this is a smaller impulse. And within the smaller impulse, if you compare, this was a bigger one and this was a smaller one. So just looking at price, we can see we are losing momentum, and there's some strong Fibonacci levels around 9,000 to 9,100. There's a decent amount of resistance up here, so nothing more than a wick, I think. But I'm expecting Jan and Feb to kind of be boring, and for us to get a dip in the first quarter itself, to get a nice correction. So keep a lookout, guys, and let's see how this develops out. Let's see how the fundamental factors develop out, and whether this loss of momentum in our chart is going to start reflecting in the news or not. Here's gold. Looking at it on the monthly time frame, so we had a nice consolidation structure, broke out, retested it, and now we're on our way up. Made another consolidation, and now we're heading right into resistance. So this is going to be quite key, guys. If we start finding support over this, then we got to look at the yearly levels. And I think I should mark that out. So this is the yearly chart on gold, and I think we should find a fair amount of resistance at this 1675 level. If we do break this block here, which is the monthly block. So this is what we're looking at on gold. I'm just gonna drill down to the daily right here. So we made a couple of longs all the way into this daily resistance, guys, and you can see we've smashed right through it. Currently I'm not long gold. I actually missed compounding my long up here to catch a move from here, but we caught this, and we caught the move all the way up to this daily level here. Very, very strong move. Of course, again, it's driven by the news of the war, and currently we're hitting resistance, so I don't mind missing the end of this move, and I would at least see some consolidation below the resistance, even if we are to continue. So going to be watching that pretty carefully. It's built a nice trend. All of December has been very strong for gold, as you can see in the monthly candle. November and December, nice trends. Bottom of November was 1440 and we are at 1574. So nice move for gold right out of this big cluster, and 2019 has been good. Oil absolutely smashing it. I've just gone out to the yearly chart because I wanted to show you something over here, and you can see that we had a bullish engulfing in 2019 on oil. So this is quite a nice signal, and I mean, if you look at the yearly chart, this was the only decent resistance we had on the yearly chart. And the next one is the psychological $100 3-digit number, so this is looking pretty good, guys. So the yearly has a bullish engulfing, and let's go down to the monthly first, just to have another look at what resistance it is that we are facing. This was our target for oil. We're going to hit our target essentially, unless we've already hit it. I'm just going to check. So this was the monthly level that we were watching. I told you guys that once we do cross 60, we're going to quickly move to 64. But I think once we get rid of this cluster here above 73, 75, I think the move to 100 is going to be pretty quick if this happens. But oil is looking bullish, guys. Maybe the decrease in supply has some kind of narrative to move this chart up, but this is looking good for some more upside. So yeah, I think target is just about missing by about 10 cents. Gonna get there, and yeah, we're gonna wait for a reaction of that monthly level. The plan is either to catch a retrace down to about 60, 61, but if this is news driven and it carries on, any support above this monthly level, and we're gonna start trading it up to higher levels. We'll be building some levels here, but just take it level to level. I'm actually looking at 75 once we do find support over 64, but going to be taking profit at some major levels like 70. I mean, oil also sometimes moves in whole numbers, so 70, 75, 60 we broke up from, and 65 is where we're finding resistance. So oil really moves in whole numbers, but yeah, once we find support at 65, 70 is the next level to be watching, and this is looking good, guys. That's what I'm saying. A lot of nice movement in 2020, some good gifts for us. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!